Greetings, listeners. Welcome to Consulting Between Friends. I am your host, Michael Holmes Jr. I appreciate the constant support. It means a lot. If you would like to support the podcast more, you can find me on Patreon at Consulting Be Friends. Once again, at Consulting Be Friends, where I do Q&A episodes for subscribers as well interviews with subscribers. You can also find merchandise on Spring. Both links will be in the description. Thanks again and enjoy the show. We all have choices to make in life, and they are constantly changing as we get older and more mature. Some of our choices can change our lives in an instant. Some of us may be born with health problems. Other problems may come throughout life. And some are caused by our own choices, like smoking and drinking too much alcohol. Life is very special and should be treated as such. We never know when accidents can happen. As we get older, we have to prepare for the worst, no matter what. Staying prepared can definitely relieve some of our stress. One way to prepare is to consider having life insurance. Life insurance can cover the costs we have after our lives ends, and it can assist our loved ones. This can assist with funeral costs as well as money to leave behind for your family. In this episode, I will be interviewing a life insurance broker. His name is Sparsh Kumar. He has 3.5 years of experience in life insurance, working at PHP. Sparsh will explain why life insurance is important and why someone should consider having their own. The topic is life insurance, the afterlife protector. We will return after a message from our sponsor. Everyone is always planning things, and advertising is needed to make it happen. So, if it's personal or business, let Pinpoint Designs and Images solve that problem. With Pinpoint Designs and Images LLC, you will receive quality work and professional service at a great price. The service that is offered: flyers, business cards, programs, invitations, photo books, ad booklets, and much more. Michael Holmes Jr., owner/principal designer of Pinpoint Designs and Images LLC. Contact me by email or social media. Email address is pinpointdesignsandImages@gmail.com, and Instagram Pinpoint Designs, and Facebook Pinpoint Designs and Images. We are back. Before the interview begins, I want to give you a little background on Sparsh Kumar. Sparsh is my life insurance agent and mentor, as well as a friend. Sparsh was born in San Jose, California. His parents immigrated from India. Sparsh was raised in St. Louis, Missouri, and has been living in Dallas, Texas for the past 8 years. Sparsh attended the University of Texas in Dallas and majored in finance. After attending the university, he started his career at Allstate, where he sold both car and home insurance for 4 years. After that, he decided to move into life insurance at PHP agencies. Sparsh is determined to help individuals achieve their goals and is great at motivating others. My guest today is Sparsh Kumar. Now, welcome him to Consulting Between Friends.
Thank you, Michael. It's an honor to be on today. I'm looking forward to it.
Thank you. I'm looking forward to this interview as well. How was your day?
It's been really good, very productive so far today.
Yes, I had a productive day as well.
That's awesome.
Well, can you explain your background?
Absolutely. Yeah. So my parents are from India. I was born in San Jose, California. I grew up in St. Louis, Missouri, and I moved to Dallas, Texas, back in 2014. So I've been living in Dallas for about 8 years now. I studied at the University of Texas at Dallas. Went to school for finance over there. And one thing about me is that I started my work career working at Allstate Insurance, and I used to cold call people. And for those who don't know what cold calling is, I would call 200 to 300 strangers all day long trying to sell them car and home insurance. And
Hmm.
honestly, I hated every part of it. I didn't enjoy working for that company. It wasn't just that job, but I felt like every job I've worked at, I was always overworked, underpaid. I realized pretty quickly that I think I'm a good person. I think I'm a hard worker, but I just I just knew I wasn't a very good employee. Like I wanted to work for myself. I wanted to be an entrepreneur. I just didn't know where to start from. And
Hmm.
so I decided to start off with the real estate business about 4.5 years ago. One thing I found out with real estate, though, that it's very saturated. Everybody does the real estate business. There's so much competition. And I realized only 2% of realtors actually make any money doing the business. There's just too much competition. And so I did decide to quit. I did lose out on some money and I did waste some time, but it didn't really affect me as much because I just know the type of worker I am. I truly believe whatever I do, I'm going to be very successful at it. It's just that that wasn't really the path for me. And I was like, okay, on to the next thing. I don't want to be an employee. I don't want to do real estate. I basically knew everything I didn't want to do, but I don't know what I wanted to do. I'm sure most of
Hmm.
you probably felt like that before.
Yes.
And I was just looking for a place where I can get into business at a low cost. I can not only help people, but I can make some good money while doing so. Because there's a lot of professions out there where you can help people, but you're not making any money. Like a lot of
Hmm.
nurses and teachers, or you can make a lot of money, but you're not really helping people. I wanted to
Hmm.
do both and have fun at the same time. And so I actually got referred into this company. It's called PHP, People Helping People, back in November of 2018. That was really my first exposure to the life insurance industry. I just realized how much Americans we don't know about finances or insurance or retirement. And I saw it as an opportunity where I can just really take over this industry because nobody does this business. The average
Hmm.
life insurance agent is a 59-year-old, meaning every year about 60,000 of them are retiring. And there's not enough
Hmm.
younger guys like myself getting into this industry. And so I decided to go all in, been to this business for about going on 4 years now. And
Hmm.
we're just getting started, licensed in over a dozen different states. I've helped out hundreds and hundreds of clients all over the country. And yeah, we're just getting the business started. Currently, I'm a director looking to become a broker in the next 60 to 90 days from now. And I'm very excited to, again, be on this podcast here today. So thank you again, Michael.
Thank you. I like your background information.
Thank you.
Well, we're about to start with the questions.
Awesome. Let's do it.
How old does a person have to be to get their own life insurance?
So, good question. to be a policy to be the owner of your own policy, you would have to be like at least 18 years old. However, a parent or a guardian can purchase a policy on you, and you can be a minor. Like you can be a newborn baby can get a policy. A parent or a grandparent can get that policy on that newborn. So to actually get a policy, I believe the you got to be at least 10 days old or about 2 weeks old, depending on the company. But to be
Mm.
the owner of your own policy, you got to be at least 18 years old.
Okay, well, that's good information. That's
Hmm.
something I did not know. and my listeners are going to appreciate that information.
Perfect.
What are the different types of insurance and what is the difference between them?
Great question. So there's a few different types of life insurance. There's term insurance, there's return of premium insurance, there's final expense, there's permanent. Within permanent, there's a few different options like whole life, universal life. But let me explain to you how the different types of policies work. So the first type of insurance is called term life insurance. Term is the most basic, most affordable type of policy in the marketplace. How it works is, let's just say, for example, we have a 34-year-old female, and she wanted
Hmm.
to purchase a $500,000 policy for the next 30 years. The benefit with term, as long as she's a healthy young female, 34 years old, it's probably about $50 a month. So term again, very, very, very affordable policy. Now,
Hmm.
many of you might listen to this and thinking, okay, that sounds way too good to be true. What's the catch? How can this lady get $500,000 life insurance for only $50 a month? The downside of a term is that eventually it expires. Typically, you can only get a term policy for maybe 10, 20, up to 30 years. 30 years usually is the limit. Meaning, if the client is 34 and it's a 30-year policy, it would expire after the age of 64. So, what that means is if she were to pass, God forbid, between the ages of 34 and 64, the full 500,000 would pay out to the family. However, if she lives past the age of 64, let's say, God forbid, she passes at the age of 80, now her family would get no money because the policy ends at age 64. So that's term
Hmm.
insurance. Again, benefit, it's very affordable. Downside, eventually it expires. The
Hmm.
second type of policy is called ROP, which stands for return of premium. How the ROP policy works is it's also a term policy, but there's two major differences. Difference number one, instead of $50 a month, for the exact same example, it's probably going to be about $100 a month for a healthy 34-year-old female. So typically, it's about twice the cost of a regular term policy.
Hmm.
However, the second difference, and this is a pretty big one, if the client is still living at the end of the term policy, she would get a 100% refund of all her money she paid over the past 30 years right back to her. And she would lose no money, she would get a full refund. So that's pretty cool in that sense. So the pro, you get a refund. Downside, it's twice as expensive as a term. And again, at the end of the term policy, she's not covered anymore. However, she
Hmm.
does get the refund. So that's the ROP policy. The third type of policy is called final expense. Now, final expense, this is like your basic policy for funeral expenses and all the final expenses. Average funeral nowadays is between 10, 15, 20, $30,000. The
Hmm.
biggest final expense policy you can get is 40 grand. So it's a much smaller type of policy. Like you're not getting a $500,000 final expense. That doesn't exist. How this policy works is the way it's different than a term is that it's permanent. So unlike the term of the RP, which eventually expire, this one lasts for the entirety of the client's life. And so let's just say we have a 65-year-old male who wanted to get a $40,000 burial policy.
Hmm.
It might be around $150 a month. And again, because this policy is permanent, no matter what age the client passes away at, the 40 grand is gonna pay out to the client. And another big benefit with final expense, there's no medical exam. You can get approved fairly quickly, sometimes even instant approval at the end of the application. Which a good thing
Hmm.
about that is that it's a lot easier to get approved with this policy because it's a much smaller coverage. I've had clients who have had cancer in the past who became cancer free for a few years actually get approved with this policy because it's a lot easier to get approved with the final expense depending on everybody's situation.
Hmm.
And lastly, the last type of policy is called permanent life insurance. And the most common type of permanent insurance nowadays is called universal life insurance, specifically the index universal life. And how
Hmm.
this policy works is many of you may have heard of somebody pulling out money from a life insurance policy before they passed away. That's exactly what this policy allows you to do. How it works is you have two accounts. You have an insurance account as well as a savings account. My
Hmm.
typical client saves about maybe 300 to 500 bucks a month into that permanent policy. However, you can save a lot more, you can save a lot less. That's just the sweet spot, 300 to 500 bucks a month. All of that money goes straight into the savings account, which is going to grow at an interest rate. Out of that, every month, a small percent comes out of the savings and it automatically pays for the life insurance policy. Let's say, for example, 300 a month goes into the savings, maybe 100 pays for the cost of insurance. That means 200 bucks a month is growing very quickly in that savings account. And
Hmm.
so, what are some benefits? So, if somebody save two, three, four, 500 bucks a month for the permanent, when they can get a term policy for 5,200 bucks a month. There's three major benefits. Benefit number one is a permanent death benefit. So obviously, because the permanent policy is permanent, it would never expire. And so that's
Hmm.
benefit number one. Benefit number two is what we call living benefits. I'm sure you guys have heard of stories all the time where somebody gets diagnosed with cancer, heart attack, stroke, or they become disabled and need some sort of nursing home care, any sort of illness or injury. If that happens to you, depending on the severity, you can actually access a good chunk of your life insurance policy while you're still living to pay for any chronic, critical, or terminal illness. Keep in mind, this is
Mm,
not health insurance. This does not cover if you get the flu or break your leg. That's what health insurance is for. This is for more severe instances. You can use your death benefit while you're still living, hence the term living benefits. And so
hmm
that's benefit number two. Benefit number three is cash accumulation. How the savings account works is what it does is it mirrors a stock market index, like the S&P
hmm
500, for example. Whatever the stock
Yes.
market does, you get credited the same interest. It's not actually invested in the stocks, but it mirrors the market. And so what
hmm
it does is whatever the stock market does, you get the same interest under two conditions. Condition number one, there's a floor at 0%. So if the market falls, like this year, the market's down, 15, 20%, your assets are protected from stock market losses. And you might be thinking, okay, that sounds too good to be true. What's the catch? The downside, there's a cap at maybe 9%. It varies company by company, but let's just say there's a cap at 9%. Meaning, if the
hmm
market grows more than 9%, you're only getting up to 9% of the stock market gains, but you get none of the losses. And so, for example, let's just say the stock market grows at 15% one year. In this
Yes.
account, you would only get 9%. What if the market grows at 5%? You still get 5% of the savings account. What if the market falls and it does negative 20%? Your money's safe and you won't lose any pennies. That's why this year none of our clients lost any money in their insurance account because insurance literally means protection. It's safe from stock market losses. And so over time, the past, 10, 20 years, this savings account, a part of the insurance policy, nets about 6 to 8% in the long term. So it's a much more safer, more conservative account. You can still get some of those market gains without any risk of the losses. And so that's how that account works. Now, another huge benefit about it is that, whenever you invest money, maybe in a 401k or even, an IRA, stock market, whatever investment, you would have to pay
hmm
taxes on that money. However, with this account, life insurance is one of three products in America that are actually tax free. So whenever the money grows, you pay no capital gains taxes. And whenever you take out the money, you pay no income taxes as long as the policy is properly structured. You can get away without paying any taxes because the money you're putting in has already been taxed by your employer. So they let it grow tax free and they let you take it out tax free, again, as long as it's structured properly. And so, getting your 6, 7, 8% tax free it can be another big key feature of this policy, along with the death benefit and the living benefits.
hmm
And then the final product is what we call an annuity. An annuity nowadays is becoming the most popular type of retirement account. This is for people who have maybe an old 401k, an IRA, money sitting aside in a CD, money market, even a checking or savings account. You can roll over money into three different accounts. Account number one is a fixed account. That's like at a savings at the bank.
hmm
Your money just grows at a slow and steady rate. Account number two is variable accounts. That's like the stock market where it can go up and it can go down, kind of like a roller coaster.
Yes.
Account number three is indexed accounts. This is how our annuities work, where whenever the market goes up, you get a percentage of the stock market gains. But whenever the market falls, you get no risk of loss. And so, one of the key features and benefits with an annuity, you get principal protection, meaning if the market falls, you're guaranteed you can never lose anything. Another benefit with an annuity is that it's a probate free death benefit. Upon death, all the money in the annuity pays out to the beneficiary in the form of a death benefit, probate free, meaning the government can't fight for the money, other family or friends can't fight for the money. It goes straight to the beneficiary, which is a big deal.
hmm
And benefit number three, which is my personal benefit, is a lifetime income stream. At a certain age, let's say I have a client who has $1 million in their annuity and they're age 60 years old, and they wanted to cash out maybe 5% per year. 5% of a million is $50,000 per year. They can pull out that $50,000 a year for the rest of their life, even if they paid out over $1 million, because it's a lifetime income. The insurance company has to pay them out 50 grand for however long they live until. If they live to 120 years old, it still has to pay out because it's lifetime. And so
hmm
again, key features of an annuity. Number one, probate-free death benefit. Number
hmm
two, you can never lose if the market falls. You have the principal protection. And number three, you get a lifetime income benefit, right? Where you can start pulling out annual distributions for the rest of your life. And so those are the main products and services that I help protect families with.
Well, you gave a whole lot of information. I know my listeners have
Absolutely.
some questions going along. And one of the questions I'm going to ask is I know some people, and I was also informed about this before I did this episode. I had one person ask me about whole life. Do you mind
Yes.
explaining whole life?
Absolutely. So whole life is another type of permanent policy. Whole life still exists today. It's still around today. However, universal, the reason why I explain universal, not whole life, universal has more flexibility to it. But
Hmm.
whole life is another solid policy. A few differences between whole life and universal life. Number one, whole life typically is a level death benefit, meaning the death benefit most times does not increase over time. However, you can structure it to do so, but typically it stays level, meaning the death benefit does not increase the longer you have the policy. With universal life, a lot of times clients like to structure in a way where the death benefit grows over time. The
Hmm.
second benefit, a lot of whole life policies do not come with living benefits. Some nowadays do come with it, but still the vast majority do not come with living benefits today. And third benefit or third difference is that with whole life, typically it grows at a fixed interest rate of maybe 2 to 4% fixed. And with the universal, it grows between the floor and the cap of the 0 to 9%. But whole life maybe is a fixed rate of 2.5, 3%. But it's another solid option for permanent insurance if you're looking for, you know, the guarantees that the policy has. Whole life is the way to go if you're looking for something simple. You just want permanent insurance. Cash value is not your main focus. You just want a permanent life insurance policy. You are looking for the guarantees where the policy will stay the exact same, nothing's going to change. Whole life is your best bet to go.
Well, I like how you explain that. And I know my listeners are going to enjoy all this information that we're talking about today.
Awesome.
Can you explain what riders are?
Yes. A rider is just a added benefit you can add on top of a policy. Like a lot of riders may be, a child rider, where you want to
Mhm.
add this rider to a policy where if anything happens to your child, it can pay out a death benefit to them as well. It's a it's a very minimal cost typically, and you can get more benefits to the riders. That's one of the riders. There could be a disability waiver premium rider, meaning if you become disabled and you can't pay for the policy, with this rider, it'll actually pay for your premiums if you become disabled. And so a rider is just an added feature you can add to a policy for a small additional cost on top of it. And you can customize it many different ways with these riders.
Hmm, that's interesting.
Mhm.
Why do you think people hesitate to get life insurance?
Great question. One of the biggest hesitations I believe when people don't get insurance is there's two different things. Number one, people don't really know about all the benefits. Most people still think that life insurance only is if you die, your family gets a check, but it's so much more than that. Like I said, the new types of policies, they come with living benefits, they come with the cash value. Most people just think that if you die, you get a check, or your family gets a check. The second thing, a lot of people also think life insurance is a lot more expensive than they actually realize, than how expensive it actually is, because I mean, even with the term policy, like I mentioned, you can get a lot of insurance for a very affordable cost. Like for a 34-year-old female, she's able to get a
Hmm.
$500,000 policy if she's healthy for maybe around $50 a month. Whereas any car insurance, I mean, if you have a $500,000 car, it's going to be a lot more than $50 a month for that car insurance. You know what I mean?
Yes.
But for
Uh-huh.
life insurance, it's a lot more affordable than what most people do realize. And so I think those are the two biggest hesitations. That number one, they just don't really know about it. They're not very educated because there's actually a shortage of life insurance agents today in America. And number two is because they think it's a lot more expensive than what it really is.
Well, I can agree with that because I knew life insurance was very important to have, but I did not know too much about it.
Exactly. And that's most Americans are in your exact same situation.
Explain why GoFundMe is the wrong approach to cover death causes.
That's a solid question right there. So GoFundMe, I mean, we all see GoFundMe posts all the time when somebody passes away. We see
Hmm.
GoFundMe, we see car washes, we see barbecues in order to raise money, and asking people for money when something happens that's unexpected. Whereas you can just get a life insurance policy for 50, 100, 200, $300 a month and pay for all that plus more. Because even if you go on GoFundMe, number one, GoFundMe takes a lot of the money that you donate, they keep a lot of that money. All of it doesn't go to the family. That's number one. Number
Hmm.
two, I think the average GoFundMe raises, I believe the number is $2,000, which that's the average one. And 2,000 is not going to do anything for a funeral cost. Average funeral, like I said, is between 10 to 20,000, meaning they still have to come out of pocket. And so GoFundMe is just not the best approach because all that money you're raising, instead if you put that same amount of money into life insurance policy, you could accumulate a lot more money to take care of the final expenses in case anything does happen. And so there's better ways to approach it. I believe like getting a policy when you're young, the policy is a lot more affordable. You're getting that price locked in for the rest of your life, and you don't need to worry about begging from friends and family members when anything does happen because there was not adequate coverage in force.
Well, I like how you explain that. Since you did say you can get it while you're young, well, you do know there's some parents out there
Uh huh.
may not be totally educated enough to get life insurance for their kids.
Yeah.
So, how you think they can get information for that?
Good question. That actually is a pretty big issue because, like I mentioned earlier, there's a lack and a shortage of life insurance agents in America today. And so many Americans are not being properly educated on how life insurance works, the different types of policies, what they can do to set their families up for success. And so, number one, a big way is just do some research. Go on Google, go on YouTube, find out about the different types of insurance, how powerful it could be for your family's future financial successes. And number two, if you have any questions, talk to an agent. It doesn't have to be myself. You can research myself. I'm sure Michael will give you my information, but just talk to
Yes.
any agent out there who has a license to sell life insurance, and they can properly educate you. They can tell you the different options that are out there, and any sort of policy is better than no policy. And so just definitely talk to an agent, do your research, and look into getting a policy for yourself as soon as possible because the last thing you want to do is wait until something happens and now you're uninsurable or it's too late. And so definitely get a policy while you're young, while you're healthy, because now is the best time and the most affordable time to get a policy for yourself.
That makes a lot of sense. When should someone consider having their own life insurance policy?
Great question. Honestly, I mean, I'm probably biased to this because because I'm in the business, but I would recommend getting a life insurance policy as soon as possible. The sooner the better. Last thing you want to do is again, I always tell my clients the best time to get a policy was 10 years ago, but the second best time to get it is today, right now. Because nobody knows for certain what the future holds. But what we do know is that right now, if you're young, if you're healthy, this is probably the youngest and the healthiest you're ever going to be in your entire life. And so might as well get the price locked in today, get the policy locked in today while you are young, while you are healthy, and make sure that no matter what happens in the future, you can't control today. And controlling today is by getting the policy, making sure your family is properly protected and covered, or if anything does happen in the future, they're taken care of financially. And that's the best thing you want to leave behind because the last thing you want to do is when your family is struggling emotionally after a death happens, God forbid, they aren't able to handle that and they have to go back to work. They have to raise money. They have to go and go funding. That's the last thing
Mhm,
you want families to stress financially in those tough situations. And so
mhm.
I would recommend getting a policy as soon as possible. Anytime a major life event happens in your life, get extra insurance. Whether it's having a kid, you need more insurance. Buying a new home, you need more insurance. Getting married, you need more insurance. You're starting to make more money. You got a new job, you need more insurance. All these major life events trigger a higher need for insurance, and so I would for sure look into that as soon as possible.
Well, that makes sense. Now, I do remember you keep saying about locking the price. So,
Uh
what do you
huh.
mean by locking in the price for life insurance?
Good question. Whenever you apply for a life insurance policy, let's say, Michael, you wanted to get a policy, maybe a $250,000 term policy, maybe it's $100 a month, just for example.
Hmm.
That $100 a month, if it's for the next 30 years, it's going to stay $100 a month every single month for the next 30 years. Typically, the price does not go up with most term policies, where you lock in the price, even permanent. I mean, where you lock in the price for the rest of your life, where the policy stays the exact same premium. However, if you wait, let's say you wait until you're 50, it may not be $100 a month. Maybe now it's 150, $200 a month if you're older. And so the reason why you're going to get it when it's younger is because you lock in the price where the price stays the exact same over time.
Okay, that's
Yeah,
important to know.
absolutely.
What does it takes to be a life insurance agent?
Great question. It what it takes to become an insurance agent is you have to number one get your license with this whatever state you're living in. Most states it's a 100-question test. You need a 70% to pass it. I know in California you actually only need a 60% to pass, but most states you need a 70% to pass the exam. You can study for typically 1 or 2 weeks. It's a very simple exam. It costs about 100 $200 to get the actual license, but you just have to study for a little bit. Go take a test. Once you're licensed, you are now are officially able to sell life insurance. And yeah, it's a pretty simple process. It's a lot easier than most people think. Most people think you have to get a college degree, you have to go to school for 6 months, a year, 2 years, 4 years. you had to spend thousands and thousands of dollars, but it's really a lot cheaper and a lot faster and easier than most people even realize to get your
Hmm,
license.
that's interesting. So,
Yeah,
anybody out there who would like to get into the life insurance business, now you know you can get a license and
exactly.
it doesn't take as much as you thought it would be.
Exactly. Now they will do a background check. So if you have any sort of felonies, misdemeanors, bankruptcies, tax liens, it may be a bit harder to get your license. Maybe not even get a license. So they do a background check. It really just depends case by case and scenario by scenario. But considering you have a clean background, yeah, really you just have to take a test. And at my office, we do have licensing coordinators. We can help you study, help you not get your exam fairly quickly. And as soon as you get your license, you can start making money right after that.
Hmm, that's really good. Well, since you're a life insurance agent, what are some of the companies that you have worked with to provide life insurance for people?
Phenomenal question. So I'm actually a broker. So I sell for about 20 different life insurance companies. And so some of the companies I represent are National Life Group, AIG, Fidelity and Guarantee, Mutual Omaha, American National, National Western, Lincoln Financial, Global Atlantic, many, many different companies I represent. And the cool thing about working with an agent like myself is that I can shop around. Like, for example, if one of you guys were to go to New York Life, for example, and you ask New York Life who has the best life insurance, obviously they're going to say New York Life. What if you go to Northwestern Mutual the next day? They're going to say they're the best. And you go to Primerica the
Hmm.
next day, they're going to say they're the best. But how would you know who's telling you the truth? You wouldn't.
That's
You
true.
have to do your own research. You got to shop around and find out who's the best. But nobody wants to do all that. It takes a lot of time. It's boring, and nobody just wants to do that. But if you go to an agent like myself, because I represent all the top life insurance companies in America, I can tell each client which company and which product is best for their situation and their scenario. That's the benefit of working with an agent like myself, where I can do the shopping around, I can do the research, and really partner up the best product and the best company with each client. And so that's how I do my business over here, where I'm like a middleman, kind of like the Amazon of financial services or like the Netflix of financial services. A lot of options. You
Yes,
can pick and choose whatever you want, whatever the client needs.
that makes a lot of sense.
Hmm.
What motivates you to keep pushing forward, and what are some of your goals?
Great question. What motivates me to keep pushing forward is really the cause I believe I can bring to this world is because I number one, I know what families go through when they do have insurance versus when they don't have proper insurance. And just seeing it's such a big difference. About 3 years ago, I lost my uncle. He was in his early 40s. He died in a total freak car accident, and he didn't
Mhm,
have a life insurance. And just seeing what my aunt and my cousins had to go through after the loss was absolutely devastating because his wife, my aunt, was a stay-at-home mom, and he had two little girls, a 6 and an 8-year-old,
mhm,
which are my cousins. And they lost the only breadwinner in the family. And just seeing what the family had to go through was awful because my aunt is now having to work a job. She had to sell the house. The kids had to go from private to public, so the whole lifestyle changed. And I've seen families who've been left behind, and I've seen families who've gotten ahead from life insurance policies. And so I just believe what we have to offer is so powerful because you can leave your family behind with wills or with bills. And a life insurance policy can change that family's legacy, leave behind the generational wealth. And so it keeps me going is just knowing the power of what I can do for families. And that's why I'm so passionate. And I really believe in what we do, the power of what we do for families. And what was the second question you had asked? It was a two-part question.
yes, it was a two-part question. And what are some of your goals?
Some of my goals, specifically with this industry or even long-term goals and aspirations.
Just goals overall.
Awesome. So I'll give you a few of them. Number one, with the insurance industry, I have a goal of building the largest life insurance agency in the country, really. I want to have 50,000 life insurance agents by 2029 in the next, 7 years. I want to have a quarter billion dollar agency. And I just want to build something massive over here in the industry. I want to give 20 years of my life into this business. And then
Mm,
afterwards, I have other goals of, getting into different businesses, investing. I want to have my own, maybe have my own schools one day and really get into investing in different aspects of business. Long term, when I'm 60 and older, I really want to get into politics, give back to this country what this country has given to me, and really help this country out. But I want to run for president one day. The goal is to become the 51st president of the United States of America. I'm very passionate, very big on that, and Hopefully, I can gain some of your guys' support one day in the future, but I do tend on running for president one day in the future.
Well, those
That's the
some
biggest
good
goal.
goals. Those some good
Yeah.
goals out there. So, what are some of your accomplishments?
Yes. So like I had kind of mentioned in the beginning of this podcast, I'm licensed in over a dozen different states. I've helped out hundreds and hundreds and hundreds of families with life insurance, with retirement. I am a director with this firm. Next, thing I become a broker in this company in the next, 2 months or so. And at our annual convention last week, I was actually hand selected to be the MVP of the organization of our organization last week at our convention in Vegas. And so that was one of the most recent accomplishments, becoming the MVP of the group I'm with. And again, we're just getting started. I'm looking to do big things, make a big name for myself, not just in my company, but as in the insurance industry as a whole. And so that's what I'm looking to do here in the next few years.
Well, I like how you explain your accomplishments and your goals. Now, I'm going to take this interview a little different. Since you
Okay.
are an agent,
Yes.
what are some situations that you had to go through to get somebody covered?
Good question. So, like specific scenarios or
It's just overall.
okay. Yeah, so one thing about life insurance is that one of the downsides, you can't actually just apply for life insurance and get approved instantly. There's actually an application process. And sometimes if a client has any sort of, health background or criminal background, it might be kind of hard to get them approved for a policy. But again, that's one of the main benefits of working with the agent like myself. I represent a bunch of different companies where if I can't get a client approved with one specific company or one specific product, I can check other options because there's so many different options I can choose with. And so sometimes I've had clients get denied with one company, but I go to another company and they get approved.
Mhm.
So I've been through a lot of different interesting situations and scenarios where it might be a little difficult to get approved with the company. But that's why, I'm always contacting different carriers, finding out, hey, can so and so client get approved with this company? No? Okay, let me ask somebody else. And I like to do my best homework to my ability and really find out the best product, the best scenario for each of my clients that I sit down with. And I like to really thoroughly work on that to give them whatever's best for them.
Well, that makes a lot of sense and very important.
Absolutely.
So we has come down to the last question. The last question is what type of information that you need from the clients first?
Like to apply for a policy?
Yes.
Good question. It's really all the clients, personal information like their age, their, where they live, their home address, their height, their weight, all their health questions, any health issues they've had in the past, their medications they take, doctor's information. Whenever you're applying, they're also going to ask for banking information, account, routing number, but it's really all the client's personal information, their health information, their banking information. All the information gets sent straight to the insurance company and it goes to their underwriting department. It's usually in there for about 1 to 2 weeks. Sometimes they can be as long as 4, 5, 6 weeks. Sometimes they can be as quickly as 1, 2, 3 days. But usually it's about 1 to 2 weeks in their underwriting department. It may or may not need a medical. If they do require a medical exam, it's completely free. They go out to the client and they do a blood and urine test. Takes about 20 minutes. If they don't require a medical, they just won't need one. Whenever the policy gets approved, if the policy gets approved, again, there's like a 20, 30% chance they may not be able to get approved for a policy. But in this scenario where they do get approved, within 24 to 48 hours after the approval, the policy drafts from the bank account. So you don't pay for anything typically. Whenever you apply for life insurance, you pay in the back end after the policy gets approved. And at that point, they would draft from the bank account. So you just collect all the basic information, send everything to the insurance company. Upon approval, they draft from the bank account after that.
Okay. Well, since I'd say that would be the last question, I have another question I'm going to ask.
Go
Since you
ahead.
mean since you mean draft from the bank account,
Uh huh.
well, you do know some people do not have a bank account.
Yes.
So, what are some options they can do if they don't have a bank account?
Good question. The companies I'm partnered up with, at least, they would have to have a bank. They don't like you can't pay with cash or anything. You would have to actually get a bank account and to apply for life insurance, you would have to have a bank account. At least with the companies I'm partnered up with, the companies that I'm aware of, they would have to actually get a bank account to get a policy.
Well, that makes a lot of sense.
Hmm.
So, the people who are listening today, you know that a bank account is very important for when you're
Absolutely.
trying to apply for life insurance.
Absolutely.
Well, Sparsh, thank you for being a guest on Consulting Between Friends podcast.
Absolutely. Thank you so much, Michael. Again, it was an honor being given the chance to speak on this podcast today. And if anybody has any questions they would like to learn more, feel free to reach out to me. You can give me a phone call or shoot me a text at 510-384-8717. Or you can reach me at email at sparsh, SPARSH .kumar, KUMAR @yahoo.com. And if any questions, just feel free to reach out. And thank you again, Michael, so much for giving me the time to speak on this podcast today.
You're welcome. And one other thing is, do you have any
Yes.
social media information you'd like to share as well?
Yes, you can look me up on Facebook, Instagram, LinkedIn. I'm all over. On Facebook and LinkedIn, you can just look up my name, Sparsh Kumar, SPARSH, last name KUMAR. And my Instagram is just Sparsh, SPARSH, the letter K and the number 00. You can look me up my Instagram over there. And those are good ways to contact me as well.
Well, that is some good information, and I know our listeners are going to appreciate it. And once again, Sparsh, thank you for being a guest on Consulting Between Friends podcast.
Absolutely. Thank you so much, Michael. It was an honor.
Thank you. After a short break, we will return. We are back. In closing, I hope you enjoyed this episode and the importance of life insurance. I wanted to make sure everyone knew the various options that are available. Sparsh did an amazing job detailing what options are available for everyone and made it relatable. I am happy to have this opportunity to learn more about why life insurance is so important. I hope everyone that listened to this episode can support Sparsh on his journey to continue helping people overall. One last thing, remember to support local businesses and protect your own life from different situations. Thank you for listening to Consulting Between Friends. This podcast is available on Spotify, Google Podcasts, iHeartRadio, and Apple Podcasts, as well other platforms that are available. So like and subscribe. Need to contact us and leave us a comment? You can find us on Instagram at consulting the letter B friends. Once again, consulting B friends. An email address is consulting the letter B friends at gmail.com. Once again, consulting B friends at gmail.com. Consulting Between Friends now has a merch online store called Podcast Merch Headquarters. This is where you can buy merch to show your support for the podcast. Some items to choose from are t shirts, tumblers, and hoodies, as well many other things I know you will appreciate. So take the time to review the items in the store. The link will be available in the podcast notes under Podcast Merch Headquarters. Consulting Between Friends now has a way for listeners to share their feedback about the podcast. The listeners can now share their feedback on Discord. The link will be available in the podcast notes and on the podcast website. Thanks again for the support. If you have an extra minute, it would be greatly appreciated if you could answer a few questions regarding the quality of the podcast. The link will be in the description. Consulting between friends. Thanks to everyone for making this possible. The host, Michael Holmes Jr., the producer and content creator, Michael Holmes Jr., the artwork cover, Michael Holmes Jr., original music, a DJ named Slash, special guest, Sparsh Kumar, life insurance broker, PHP Agencies, content distributor, My Producer Podcasts,